Hello and welcome to the New Indian Express. It was a cheerful Monday for India's equity market. The market made a strong comeback thanks to the truce between India and Pakistan. It brought smiles back on the faces of the investors. Let's talk to market expert and chief investment strategist at Geojit Investments Limited, Dr. VK Vijayakumar, to understand what happened in the stock market. Hello, sir. Welcome to the New Indian Express.
Thank you. Nice to be here.
Okay, sir. Now, investors woke up to some very good news today. Markets are high on the rise. Nifty and Sensex are rising sharply. Now, the most obvious reason for that is the declaration of the ceasefire. But do you think that there is some other global factors that might be contributing to this? And do you feel that this momentum or this rise is a little turbulent? This bullishness is a little turbulent as matters are still tense on the border? Or do you feel that this rise will continue?
Well, the immediate trigger for this sharp rally, of course, is the ceasefire. A rally of this magnitude needs a big trigger, and that big trigger came in the form of the ceasefire. But a very important point that we have to understand is that the market had not crashed or even corrected sharply, even when the conflict between India and Pakistan broke out. Market was actually resilient. And the important reason for this resilience has been that FIIs, foreign institutional investors, have been steadily investing in India for 16 days consecutively. 16 days ending May 8th, FIIs invested on every day. The total amount of investment cumulatively for the 16-day period was more than 48,000 crores, not a small amount of money. And the important reason for this sustained inflows, FII inflows, that immediate trigger has been the steady decline in the dollar index. After the election of Donald Trump as the president, dollar has been on an uptrend, and the dollar index peaked at 111. That was in mid-January. So after the election of Donald Trump as the president, dollar index has been climbing up. Then after peaking at 111, it has been steadily coming down. And now it is around 100, actually dipped below 100. So more than 11, 12 percentage decline in the dollar happens very rarely. So when the dollar declines, it is always favorable for emerging markets like India. And among emerging markets, India has the best growth story. So that is why a lot of money has been coming to India starting mid-April and till the 9th of May. 9th of May was the only day during the last 17 days in which the FIIs sold because the tensions escalated. Now, of course, you are right. The ceasefire, some people believe, is a little bit fragile. With Pakistan, we cannot be very sure. But then that there is pressure on Pakistan. Their economy is almost bankrupt, and they cannot afford an extended conflict with India. India can afford, but then an extended conflict will do a lot of damage to the Indian economy also. But now the consensus is that the ceasefire will be permanent. We will be on our vigil, but then the ceasefire is sort of permanent, and we can expect a peace on the borders going forward. So the other reason, as I said, is this decline in the dollar index and the sustained FII inflows into India. And also in India, other macros are also turning positive. For instance, our inflation is very much within the RBI's comfort zone, less than 4%. So the RBI is on a rate cutting cycle now. They have already cut repo rates twice by 25 basis points. And in this rate cutting cycle, another 2 or 3 rate cuts by the Monetary Policy Committee are possible because inflation is very much under control. So these are all very favorable macros, which has turned out to be very positive for the stock market.
Okay, sir. Now, in your analysis and in your opinion, which sectors do you think were most adversely affected by this India-Pakistan conflict?
In fact, Indian stock market was not seriously affected. Normally, when you have a crisis of this proportion and magnitude, the market corrects by more than 5%, 10%, or even more. We had instances where markets had corrected by more than 10%, even 20%. But this time, the maximum correction that we had in a day was only around the 2%. That too when the tensions escalated. So to start with, the market did not correct sharply, and no segment was impacted. But one segment which was sharply impacted was the IT segment. And the reason was not the conflict, the reason was this April 2 reciprocal tariff declared by Trump, and the impact on the global trade is expected to impact US growth. In the first quarter of this current year, 2025, US GDP has already contracted by 0.3%. -3% is the growth rate in the US. So going forward also, growth in the US will be sluggish. So when growth in US is sluggish, their corporates will be spending less amount of money on tech. That's why the technology stocks were hit. And even now, technology stocks, particularly the large cap stocks, are very much, I think, more than 5%, and in some cases, 10% down from their peak levels. Whereas other sectors like financials, for instance, leading private sector banks, industrials, certain segments of automobiles, cement, segments of cement, platform companies, all of them are ruling at their near lifetime highs or 52-week highs.
Okay, sir. Now, when there are conflicts across borders, one of the sectors in which there is constant activity is the defense. Now, during this period of time, in where there was conflict between India and Pakistan, do you feel that there was some major buying and selling in the market with respect to defense stocks?
Well, defense stocks have been rallying for quite some time uh, before the conflicts began. And when the conflict actually began, they again gained momentum. And now the problem with defense stocks is that they have run up too much too fast, and there is no valuation comfort in defense stocks. Of course, in the medium to long run, they will do well because the government will prioritize defense expenditure. But then, right now, there is no valuation comfort in defense stocks. And therefore, there can be a little bit of a profit booking in defense stocks, at least in some of them.
Okay, sir. Thank you. Thank you so much for talking to us, sharing your views on the matter, especially at these uncertain times where investors are very confused as to where the market is headed. Thank you, sir.
Thank you. Thank you very much. It was a pleasant experience. Thank you.